Good evening, everybody. This is Jeanette. How's my sound coming through? Everybody hear me okay? All right. Well, I'm Jeanette Sims, for those of you who don't know me. Been around doing this gig for quite a long time. Morgan and I actually used to work together, and he used to work summers. Old Morgan Busby, when he would come home from college, he would work summers at my old firm, and so that's how we got to know each other. And now we are very blessed to get to work together in this internet marketing world that we're in. And so I really was excited when he asked me to come and help moderate tonight. One reason is that one of my favorite people in this industry is speaking tonight, and I got blessed with the opportunity to come and introduce him. And for those of you who don't know, his name is Hubert Centers. His website is hubertcenters.com, and I met Hubert back, I don't know, probably around 2002, 2003 in Las Vegas for the first time, and we've been friends ever since, and he was on my bucket list. I don't know if y'all have a bucket list of traders or people that you want to be associated with in this industry, but he was one of those guys. And in the past year, we've started working together very closely, and I've actually been to his house in Versailles, Kentucky, in what he calls the Bat Cave, and traded side by side with him. And Morgan and I both been there together, actually. So it's I'm thankful that I've got this opportunity to work with them and be here with y'all for the next couple of hours. So I want to go ahead and introduce to you my good friend, Mr. Hubert Centers. Y'all give him a big round of applause.
Let me mute my own microphone here. Put a headset on so in case somebody talks to me, I'll be able to interact with it. All right. So first and foremost, give Morgan and his team a round of applause. It is got to take a special
Hubert, your sound's a
amount
little low. Crank it up
to
a little
put
bit.
one of 4-hour trade-a-thons on. So what I'm going to do tonight is I'm going to show you some of the trades that I do. Then we're going to talk about what happened in the NASDAQ, and we're going to talk also how to protect yourself in case that happens again. Did anybody get stuck in trades today on the NASDAQ, either in stocks or options? Anybody in here? Yes, no, maybes? Yes, no, no, thank goodness. Yes, yes, yes. All right. So how'd you come out? Did you come out okay, or did you know how to properly hedge? Because I'm going to talk a little bit about that. And I threw the slides on top of my normal slide that I was going to talk about, like how to risk $156.25 to potentially make $1,000. And I've been tweaking the trade a little bit, where I'm now risking 300 to make 2,000. And I'll share with you the results I've been using with that stuff too. So, all right, so I've got a lot of slides. I'm going to teach you at least a minimum of two of my favorite trade setups. If you're having problems with audio, hit F5. If you need to turn your speakers up, turn your speakers up. Now, one thing that I will do, like if I read all your questions, if I read all your physical questions, I will go down a rabbit hole and I will take somebody else's time. So I don't want to do that. So what I want to do is, if I'll stick to the slides, and then I'll take questions at the end, and I'll take them as fast as I can, because I'm pretty used to taking questions from people on a lot of webinars. I've been doing the trading education gig for about 10, 12 years, and I've been professionally trading for about 18. So let's get started. I think that somebody's probably already done the disclaimer, I would think. There we go. All right, but I'm going to cover it one more time. So first, the warning. I am registered. I have my own futures brokerage firm. I'm a Series 3 and I'm a Series 30. So, and number one, it's just the right thing to do. So, you are probably going to lose massive amounts of money trying to learn how to do this gig that we call trading. It's very risky. You should never trade with more money than you have to lose. If it changes your lifestyle and you lose it, that's going to be bad for you. Okay. So, does everyone understand that when we're talking about these trades, a lot of times we are talking about hypothetical, simulated, past performance is not indicative of future results. We're using the benefit of hindsight. Now, some of us also show what we're really doing in our accounts, and we'll show you trades that we've recently taken. But I just want to make sure that everyone knows how risky it is to do this game, which is called trading. How's that? Is the mic a little bit better for y'all now? All right, so let's move on. So my name is Hubert Centers. It's spelled really odd because for whatever reason, one of my grandfathers decided to change it from an S to a C. I'm pretty much known in the industry for my no BS approach to trading and investing. And that's what we're going to cover in today's webinar. Now, this is going to be a little bit different, but in a good way. One of the good ways it's going to be is I'm not going to BS you of any kind. I'm not going to make you feel good. I'm not going to blow smoke up your rear end and tell you any crazy tales of, yes, you can take 5,000 and turn it into 2 million, although I know people that have done that. You never hear the story of, okay, then he took the 2 million and blew it up. So you can do that type of stuff, but it's like fairy tale stuff, and odds are really, really, really against you. So before we start, let's talk about what happened today in the NASDAQ. We had a 3-hour flash freeze, which basically means that the NASDAQ was down from 12:14 till 3:25 today in the stock market and in the options market, okay? So if you don't know how to hedge, you had better learn really quickly how to hedge, because this stuff is going to continue until they upgrade their infrastructure, okay? Because it'll even happen on the futures exchange. Sometimes you'll have Chinese, see, I read that text right there, Chinese hackers. Sometimes you'll have exchanges go down, CME, Chicago Board of Trade, CBOT, NASDAQ. They all go down from time to time. You have to have a contingency plan. You have to know what you're going to do when the crap hits the fan, right? And if you don't, when something happens, then you're screwed. You get stuck in a position you can't really do anything with. So I'm going to teach you 2 really simple ways to do that. Well, it's actually one. We're just going to talk about both positions. So hedging 101, all right? So let's pretend that you were long Apple today, or any other stock for that matter that's on the NASDAQ. If you're long and the NASDAQ futures go up, then you don't have to really do anything. Does that make sense in your brain? If you're long Apple or anything that's traded on the NASDAQ and the NASDAQ exchange goes down, if the NASDAQ futures are still rising, then you're probably okay. So you really don't have to do anything other than just watch the NASDAQ futures and go, okay, they're going up and I'm long, so that's good. So when it opens back up, my stuff will be up, okay? There's no image, it's just slides. All right? Now, let's say you're long Apple and the NASDAQ futures go down, what should you do? If you're long Apple and you start seeing that the NASDAQ goes down, but the NASDAQ futures, in other words, it locks up, what should you do? You buy a put. You can't buy a put if the exchange is down. That's right. Then what you would do is you would short the NASDAQ futures. You could also dial 911. First thing you'll probably do is pray or cuss or go, what in the love of, why can't I get out? And then what you'll do is you'll pick up the phone, you'll hit buy or sell to cover, and you'll see that nothing happens, and then you'll pick up the phone, call your broker, and go, hey, what's wrong? And you won't get through because everybody else is calling. That's just how it goes. If you've done this, if you went through an exchange being down, and if this is not your first rodeo like mine, then you have a contingency plan. Yeah, buy puts on Apple. You can't if the exchange is down. If they're not taking new orders and they're not letting you out of old orders, the likelihood of that happening is low. So what you would want to do, if the CBOE was open, yes, you could do that. Okay. But what you would want to do is you'd want to short the NASDAQ to hedge the drop in Apple or whatever else you were in. So you could also short the S&P or the Dow or the Russell. It would also work, although the NASDAQ's going to work a little bit better. Okay? So that's one way to do it. All you have to do is just have a small futures account, because futures are so leveraged, you're not going to have to go crazy with it. All right. So I have a firm belief that if I can do this, a redneck from the eastern hills, the coal mining hills of eastern Kentucky, you can do this. These pictures are just to show you that you can do it, and to show you like if a poor hick from Kentucky can make millions and multi-millions of dollars either in business and or trading. I have a firm belief that if you find someone successful and you do what they do and you get some training from them or you copy what they're doing, you will have a degree of their success in one way or another. So I'm a huge believer in if you copy people that are really, really successful, I believe that you will get to at least their type of success that they have. Now, everybody's all messed up. Every single one of us. There's 815 people in here, and we all got issues. Like Paula here. Paula's actually about 6 inches shorter than that because she's wearing 6-inch heels. Super nice lady, sweetheart. Branson, he's jacked up, and we've got a couple things in common there. Both me and Branson both suffer from dyslexia, which when we sat down and had a talk about it at his fundraiser, we were like, I don't think it's a curse. I think it's a blessing because we kind of look at things a little bit different, so it's kind of cool. And then over here, this is just a picture of, how do you do the pointer with this thing? Here we go. So over here, this is just a picture of my office, and I've got 6 24-inch LCDs. This is the microphone that I'm talking to you on. I am never in this suit with this white button down on. I'm always in the back cave right now. I don't have any shoes on. I have a pair of shorts on and a headset and a fleece on top of a fleece top. So I'm in the back cave, and it's just cool just having everything real close in at hand. When I was originally a poor kid in Kentucky, I was like, okay, if I ever make enough money, and I always watched a lot of The Ghost of Mr. Chicken and Scooby-Doo. I was like, I'm going to have a secret passage to my office, which is a bookcase door. So that's actually how I come to the office every morning. There's a bookcase door that leads to like a little secret passageway that opens into my office and stuff, and that's where I work at every day. So like I said, I'm a firm believer in you can do this. If I can do this, Lord of mercy, you ought to be able to pull it off too. So congratulations, you are in the right place at the right time. And once again, give Morgan and his team a round of applause, and all the other speakers. You would not believe how hard it is to put one of these off and pull them off without any tech issues. So a round of applause for him and Jeanette. So let's do some math really quick, because I want to teach you. I don't want to just tell you stories while I'm here. What I want to do is I want to give you a lot of value for coming and showing up. Okay? So the one thing, I'm going to teach you 2 really good trades that I consistently do when I'm in front of the computer. Okay? So but before we do that, we're going to do a little bit of math. Okay? Now, I suck at math, which should be a good thing for you, because if I'm bad at math and I can do this, you ought to be able to pull it off too. Let's pretend that this trade only works 41.37% of the time. And what we're going to do is we're going to say we have a string of 10 trades, okay? On 10 trades, we're going to say we have 6 consecutive losses, and we're going to take a loss of $156, okay? So 156 times 6 is going to be, what can I draw? Do I not know how to draw? Is that the problem? Ah, here we go. It's going to equal $936, okay? Now, if we take 4 winning trades and our target is $1,000, then that's going to be $4,000. So now it just comes down to basic math where we're going to go, all right, 4,000 minus $963 is going to equal $3,000. Now that's with a trade setup that only works 4 times out of 10, okay? Let's say it's even worse than that. Let's say that out of 10 trades, you're only going to have 3 winners. You're going to have 7 losers. I bet my little teleprompter will work with this software, and if it will, it is going to make my job just a bunch easier. It's going to be 156, and you're going to come out with $1,000. Now, if you take that, and then you go, all right, there's 3 winning trades times $1,000, even in Kentucky, that equals $3,000. So now we come out with, on top, you still are positive net 1908. Okay, so that's if this thing only works 3 times. If it only works 3 times out of 10. Make sense? Is everybody cool with the math? Did I do the math correctly? Let's hope I did. Okay, so let's talk about the 5 stages of a trader, or 5 stages of trading that you're probably going to have to go through in order to get to the other side, which you're going to want to, be successful. Now, success is different for everyone. For you, it may be $2,000 a month, it may be $10,000 a month, maybe $20,000 a month, maybe $200,000 a month. I don't know. What's the catch? There is no catch to this trade that I'm about to show you. There is no catch whatsoever. It's very simple to do. It's very easy, and it's going to take the biggest piece of it out of there. Why 156 loss and why $1,000 gain? I'll show you. I'll get to that in just a second. Is this being recorded? It is being recorded. All right. So let's talk about the 5 stages of trading. So there are 5 stages. First stage, you learn how to lose massive amounts of money. Anybody been in stage 1 before? I will tell you from experience, it sucks. It's terrible. You don't think you're ever going to get out of it. You're like, oh my God, I qualify for food stamps. I don't want to take them though. I mean, it hurts bad. Everything in your being wants to tell you, like, please stop. And you just got to power through it and lean into it and embrace the suck and figure out what you're doing wrong. And then you'll get to stage 2 where you will learn how to lose a little bit of money. And this is a little bit deceiving. So a little bit of money can be a big old gain followed by a big old loss, or it could be a little gain followed by a little loss. So it could be both. This would be the treading water stage, would be stage 3. But the little loss just means, okay, you were burning cash so fast, it's like you were setting it on fire, and now you've learned how to consistently just lose it, but a lot slower, so you've slowed down your burn rate. Now, stage 3 is where a lot of people kind of end up getting hung up on. It's where you tread water and you learn how to lose a little bit of money, and you learn how to make a little bit of money. And then you have a real big trade, and then you have a real big loss. And then you start consistently making some consistent cash flow, and you start to figure out what's going on with that from that side of things, and then you learn to eventually make a killing. Now, killing is asterisk because I don't know what a killing is to you, and I'm not saying if you go through all 5 of these stages, you're going to make $1 billion. I'm just saying those are the normal stages. So real quick, informally, what stage are you at right now? Are you at stage 1? Are you at stage 2? Are you at stage 3, 4, or 5? And we'll see how many numbers. So lots of 3s, a couple 4s, some 2s. So I'm seeing more 3s than anything. Okay, so I'm seeing lots of 3s. Had a 4, there's a 5. Congratulations on that. 4s are looking good. All right, so it looks like we have more 3s than anything. All right, so there's a couple things that you can do if you're at stage 3 in order to get to stage 4. And what that is what you want to do is you want to minimize your losses, but more than anything, what you really want to do is you want to hold on to your winning trades a little longer, okay? And what I mean by that is you can minimize your losses all you want. Hey, Kelly, will you do me a favor? You replace this battery in this thing. It's clicking like crazy. Right. Yeah, thank you. All right, so the thing that you want to do to go from stage 3 to stage 4 is you want to hold on to your winning trades a little longer. And I don't mean a lot longer. If you just increase your winners just a little bit, it'll overshadow or overcast all those losers that you're going through, okay? So it looks like a lot of people are at stage 3. So hold on to those winners a little bit longer. Only problem with that is if you're at stage 3, what you want to do is, as soon as you're in a winning trade, what's your natural tendency to do? You're like, get out. You know why that is. As soon as you jump in that trade and you get some profit in the trade, you're just like, profit. The reason you do that is you're afraid of giving it back. And you're sitting there going, man, I've just lost so much money and I'm tired of losing money. This is a winner. All right, I'm just going to take my money and I'm going to let those losses just sit there and they'll eventually turn into a winner. And it never happens. So what you want to do is you want to train yourself to go, oh, that's a winner. Okay, leave it alone. Just put it in a crock pot, let it simmer for a little bit, and just chill. And just take yourself out of it. I have never met, just write this down, this is a good analogy. I've never met anybody that gets smarter once they're in a trade. Have you? Have you ever met anybody that gets smarter once they're in a trade? They almost always make the worst possible decision. And it's kind of funny if it wasn't so brutal, all right? Because the markets are just basically a big character magnification device where if you're real jittery and you're hyperactive and you're OCD, you're gonna be more of that. If you're anal retentive, you're gonna be more of that. If you're a cowboy, you're gonna be more of that. So you gotta learn how to be fairly level-headed and disciplined in order to get through the other side of this thing. So make sure you stay stable. All right. Now, the next thing you gotta figure out is what type of style. What's your major style? So this is what I mean by style. And this is gonna be a little bit harder because I don't have my normal recording software. Are you style 1 where you have a big loss followed by a little gain, little gain, little gain, followed by a big loss, followed by a little gain, little gain, little gain, followed by a big loss? That's style A, okay? Or are you style B where you take a big gain and then you go little loss, 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 big O gain, little loss, little loss, little loss, little loss, big O gain? Or do you suffer from dreaded C, where it's a big O loss, little loss, big O loss, series of little losses, and then another big loss? Which one are you? Are you type? What style are you? Are you A, B, or C? I try my best to always focus on B as much as I can. I'm not going to lie to you though. Sometimes I do A and C too, right? It depends on where you're at in your how you're trading and what the markets are doing. So it's best if you can focus on B. It's going to make you the most money. Okay. So I'm going to teach you how to do that tonight if you're willing to do it. It isn't going to require some cojones. You're going to have a few balls about you and some intestinal fortitude to do these trades. Is everybody cool with that? But you're going to have stops in, okay? It's not going to freak you out because you're going to have stops in, and stops work most of the time. They don't work all the time, but they work most of the time. And plus, you're going to be out of the equation. If you'll just let there and set it and let there simmer for a bit, then you'll be okay. So let's move into it real quick in here. So I've got an hour. So if you're type C, you probably spend a little time like this little man right here that's like, you're pulling your hair out, you're screaming like, oh God, please make it stop. Especially if you're stage 1 and 2 in your style C. It's just the worst thing ever. It's just a bad place to be. And if you're there, just try to hang in there, man. Just get through it. And anybody ever see the movie Shawshank Redemption? Great movie. Teach you a really good thing about, like, if you're willing to crawl through 2 miles of sewage to get to freedom, you'll probably make it. But if you're not willing to do that, you're going to die in the prison. So it's a really good movie. Check it out if you've never seen it. So I'm going to tell you a little story about pot roast, and then I'm going to get started teaching you this trade. The reason I do this analogy all the time is because it's a good analogy. There's also an analogy with a scorpion on how to pick the right market. Like, sorry, that's in my nature. So a lot of stuff. So I'm going to use 2 different names. I'm going to use Lisa, which is my wife, and Kelly, which is my right-hand woman here in the office, and she's here right now. So Lisa and Kelly are cooking supper, and Lisa's fixing a pot roast, and she ends up, taking the pot roast, and she puts carrots and potatoes around it, and garlic and onions and oregano, and puts salt and pepper on it, and then she cuts the ends of the pot roast off, puts it in the pan, and then puts the pan in the oven. And Kelly goes, Lisa, I got a question. Why did you cut the sides off the pot roast? She goes, I don't know. That's how my mom taught me how to make pot roast. That's how we do it. So then Lisa goes home and asks her mom and says, hey, Mom, why do we cut the ends off of the pot roast? And she's like, oh, that's just how Grandma taught me how to make pot roast, and that's how I taught you. And she goes, oh, okay. So they go see Grandma, and Grandma says, all right, they ask her, like, hey, Grandma, at this point in time, she's getting a little older, so it's harder for her to remember. Can you go through the recipe for the pot roast? She's like, oh, yeah, you soak it overnight, you put some salt and pepper on it, some garlic, some thyme, some oregano, you cut up some carrots and potatoes, and then you cut the ends off of it, and then you put it in the pan, and then you put it in the oven. They're like, all right, stop right there. Why do you cut the ends off of it? And she's like, oh, honey, back in the day, we didn't have any money, and I only had one pan. The pot roast wouldn't fit in the pan. So I just would cut the ends off of it to make sure it fit in the pan. So I don't know if you ever suffer from that when you've asked somebody what's the best market to trade. If you did, people probably said the best market for you to trade is probably the S&P minis because everybody trades it. And it's the one with the biggest volume out there. You want to trade that one because it has the biggest volume and everyone trades it. So did you ask yourself a question, or did you just believe what they were telling you? So real quick, another informal little poll here. What do you trade the most of? I trade everything, but what do you trade the most of? You trade stocks, options, futures, forex, bonds, crude, gold, currencies, currency futures, All right, so we've got a lot of people here on different instruments, so that's good. All right, so let's go to the next slide. So here's what you probably found if you trade the E-minis for more than a couple days. You probably got chopped up. Anybody get chopped up in the E-minis? Specifically the S&P. The S&P is a little choppier than others. Well, what you probably found out is you got chopped up, and then you started asking yourself this question. What went wrong? Why can't I do this? I'm smart. I'm successful in everything else I do. What in the heck gives here? And you just start going, this is just too hard. It's got to be rigged. And it's not so much that it's rigged. The thing is, what happened to you is you have been betrayed by other people, okay? And it's not really their fault, and it's not your fault, but what happened is, and like I said, it's not your fault, you've been lied to. Who are they? Who lied to you when they told you like it's the best market to trade? So just enter in your stuff, like who told you these crazy stories like, oh, the S&Ps are the best market to trade? They are other traders the media, investors, and it's just passed down from generation to generation. But did you test it? Did you test other markets, or did you just blindly start trading the E-minis because, oh, well, everyone trades them, so I should be able to trade them, right? Did you believe it, or did you follow up, test it? You need to always trust. You need to always trust, but verify what you're doing in trading. So another quick informal poll, true or false, if you can trade any market. Do you believe that to be truthful, or do you think that's all hot air? True or false, if you can trade, you can probably trade any market. So a lot of different answers. I can't see all of them. It looks like it's a little mixed. So for me, I believe it's true. I believe it is true, but it's a lot easier. It's a lot easier if you trade something that matches your personal trading style and your trading personality, okay? In theory, it should be a yes. But if I throw you in crude oil, and crude oil is bipolar, right, you might get chopped up. So although I think you can, if you're a decent trader, if you're a good trader, you should be able to figure out this market and how it moves and how it gyrates and figure out a strategy to work with it. But there's some things that you just can't do. So, and it's not a bad thing, okay? If you do not match your trading style to the right market, it is going to be painful and very, very frustrating. Trading the wrong market or the wrong style for you is going to be like you're hitting yourself in the head with a hammer. It's going to feel great once you stop. So I'm going to read that one more time. Trading the wrong market for you or the wrong style for you is like hitting yourself in the head with a hammer. So if you hit yourself in the hammer, it's going to feel wonderful once you stop. Now, let's think about this statement. If we all believe here that if I can match you up with a good, and we're all going to be different, so not everybody, this trade's not going to be for everybody, and I know that. And but other trades might be for you. Like I'm more of a trend trader that buys pullbacks as opposed to a counter trend trader. That's just how I'm wired up. So if I could show you a way in order to match up where you kind of meshed with a market and jived, do you think you could hold the trades a little bit longer? And do you think, jackhammers, that's funny, do you think you would make more money if you were just kind of in sync with a market that was easier for you just to understand? I mean, you throw me in Russia, I'm probably not going to be able to speak the lingo. I'm going to struggle. So let's think about this statement. What's wrong with getting richer quicker? And by richer, I just mean what's wrong with you going through your trader's journey of success and getting through it a little bit easier as opposed to stepping on different landmines and blowing you to bits. So this is how I go about picking a good market. So let's talk about how to pick the best market for you to trade, okay? How to pick the best market for you to trade. The first thing I'm going to recommend is you first want to know what the average true range is of that market, okay? So in this example, we've got the ATR. This is just a 14-period look back. That looks like a 19, but we're looking at 14 periods, all right? The Dow moves 93 points a day times $5, which means it's going to be plus or minus $465 a day, okay? The S&P moves 10 points. It moves $50 a point. It's worth plus or minus $515 a day. The NASDAQ is 25 points a day. It's worth 20 bucks a point, plus or minus $518. The Russell, 9 points. It's $100 a point. It's going to make or lose you $990 a day, depending on if you're on the right side of the market. So every one of these, the Dow, the S&P, the NASDAQ, and the Russell, they all trade like this. They run, stop, and reverse. Run, stop, reverse. Run, stop, reverse, and then they'll break away, and then they'll come back and do this again. Run, stop, reverse, run, stop, reverse. Anybody see that picture in the Dow, the S&P, and the NASDAQ, and the Russell? About the time that you've got them figured out, they come back and get you. And it's not their fault, and it's not your fault. It's just the way they are. If you go to pick up a snake, and let's say there's 5 snakes on the ground, and one is hissing and rattling at you, and the others are just moving nice and slow, which one are you going to try to pick up? You're going to try to pick up the one that's pissed off and wanting to bite you, or are you going to pick up the one that's just kind of just moving nice and slow? I mean, if I forced you to pick up one of the 5, wouldn't you be really cautious in which one you picked up? All right. So the 30-year bond, it moves about a point a day, a little bit over a point. It's worth $1,000, and you're going to make or lose about $1,150 a day. Crude oil moves almost 2 points, worth $1,000. Oh, here it is. This is the market. $1,830. Only problem with crude oil is it's like a mean old ex-girlfriend, okay? You know, like the psycho ones, or a mean old ex-boyfriend, you know, like the mean ones. Crude oil is bipolar. It is very liquid, yes, but it is bipolar. Sometimes it'll wake up on the wrong side of the bed. In the middle of the day, it'll get happy, and then by the end of the day, it'll want to rip your head off, okay? Hey, I'm a girl, he. I also used a boy in the analogy. I'm good. All right, so it's not a great one to trade, so I would stay away from that. Silver also, I have made or lost $25,000 in seconds in silver. Tough one to trade. Very, very, very tough market to trade. Silver. Gold, not so bad. Gold is more a marathon runner where it'll break out, consolidate, break out, consolidate, and then break out. That's how gold acts. So for silver, you can make $3,000, but in all likelihood, you'll probably lose $9,000 because it's so volatile. And then here's the currency futures, or the spot forex market, and they have really good trending markets too. They trend. So the one I'm going to try to talk you into trading is the bond market tonight, the 30-year bond. Anybody in here trade bonds? Because I know I'm going to have to come over some objections, because for whatever reason, every time I do this presentation, people are like, oh, the bonds. Oh, no. Like a bond? Like they're going to give me paper? Like a grandma bond? So what are some of the reasons that you don't trade bonds? What are some of the reasons that you don't trade? Is it just because you don't know how to trade them? Is it because they scare you? Is it you don't know enough about them? Need to know much more. So if you guys are cool with it, I'll teach a whole bond 101 course right here to you, so that you'll have some experience. Okay, and you'll be very, very intimate with the bond market. You'll know exactly what to do with it. 30 feels slow. Yeah. So here's how it trades, though. All right. If you're used to trading, the good thing about bonds is you're going to have the ability to hold on to a winner longer, okay? And the reason you're going to do that is because we've already talked about this, but let's go over it one more time. The reason you're going to do this is because the index futures trade like this: run, stop, reverse, run, stop, reverse, run, stop, reverse. The bond market trades like this. It'll go up 5 ticks and down 3 ticks, and then up 5 ticks and then down 3 ticks. It'll actually break away for you. It'll pull back 8 ticks, and then it'll continue. It trades very, very methodical, sometimes to the point that it'll put you to sleep. And then you'll go to sleep, and you'll be like, oh, God, it's so boring. And you'll wake up, and you'll either be up or down. But it's not exciting. It's not like the gambler's paradise. But it's worth $31.50 a tick, so you're going to make some good money on it, or you're going to lose some good money on it if you don't know what you're doing. All right, so we've already covered that. Let's skip this next slide because I don't need it. Okay. Tell me what slide you guys are on here, because bond basics. So we're going to go over the months. Okay, we're going to go over the months. We're going to go over the time, cautionary points, the symbols, the tick values, and the dome. And we'll talk about margins, and we'll talk about 2 trades. Okay. Now, there's actually different markets. There's different markets that you can trade on this. So one is the bond market, and one is the note market. So I'm going to teach you how to trade the 30-year bond. So there's a 30-year bond, there's a 10-year note, there's a 5-year note, and there's a 2-year note. I'm going to be talking about the 30-year bond, okay? The 30-year bond. Now, first and foremost, do not let bonds freak you out. It's just a future, the exact way. How many of you in here trade the E-minis? Show of hands. Show of hands. If you've traded the E-minis, then you can trade a bond. And you can also trade a note, because it's nothing but a future. That's all it is. There's nothing scary about it. It's not going to hurt you any better or any worse than any other market. Okay? So bonds, yeah. Do they react the same, bonds and notes? A little bit different. They within themselves, they got a little bit different personality. I prefer the 30-year. A lot of people will trade. More people trade the 10-year, but I'm going to teach you how to trade the 30-year. All right, so the delivery months. Now in futures, I don't know what sick individual started this little weird acronym, but really these are all the futures months. If you don't know the futures months, and I don't know how this U got over here, that's just weird. The futures months that you need to know for the bond market are as follows. It's the same as the index futures. All right, so the bond months are H, M, U, and Z. So H is March, M is June, U is September, and Z is December. Does everybody understand how futures work? Who does not understand why we do these months like this? Because I can cover it real quick. I've got enough time. So let's go futures 101 here really quickly. So in March, let's say in March of 2013, God, this pointer does not want to write the correct way. Hold on, let me erase this. I wonder if I can make the pointer just a little smaller. Okay. All right, so in March in 2013, up until the second week in March, we will trade the March contract. When we get to the second week in March, then we're going to trade the June contract. When we get to the second week in June, then we're going to trade the September contract all the way up until the second week in September. So by next week, or I'll say next month, the second week of next month, we're going to be rolling out of September and we're going to start trading December. Does that make sense? So yeah, that's the way I remember it too. Hey man, you look like hummus. Yep. The E-minis are the futures for the S&P 500. That's correct. You got it. I know somebody should. Is there a continuous contract? There is, and for the futures, I use TradeStation and I use Thinkorswim and I use Infinity. In TradeStation, it's US. For Infinity, it's ZB, and in TOS, it's /ZB or ZB, depending on what country you're from. All right, does everybody know what months they trade? All right, these are the specs. On the US, it's usually the 30. The TY is usually the 10-year note. The FV is the 5-year note. The TU is the 2-year. We're only going to be covering the 30-year, okay? All right, now the bond market has two different markets. There's the continuous electronic market, which opens up at 6 p.m., which was about 2 hours ago. All right, and the bonds right now are trading at 1:30 and 20-30 seconds. They're trading on their low, and it closes at 5 p.m. So how long is the continuous contract open for? How do you place an order on the bonds? I'll show you. I'll place a bond order in front of you before I get out of here. So yeah, they're open 23 hours a day. Now, the open outcry, which are living dinosaurs in the pit now, where the last time I was at the CME at the Chicago Board of Trade, I think there were 8 guys in the 30-year bond pit, and it used to be one of the thickest, biggest, crowdest pits in the world, and now there's 8 guys in there because now it's all electronic. Well, that opens up at 8:20 and closes at 3 p.m. 1 hour according to the slide. No. It opens. Hold on. It closes it closes at 6 and opens at 5. Actually, I'm wrong. I'm actually totally wrong. It opens at 6 and closes at 5. That's how it works. So it opened today at 6. It won't close again until tomorrow at 5. Whew. And these are East Coast times, yes. All right. Just going to the next slide here. So here's what it looks like. This is a cheat sheet on TradeStation. You can see here on my slide. This is the @US. That's the 30-year bond. And you can see it opens up start time here at 6 o'clock. It closes at 5. It's worth $1,000 a point. The only sucky thing about these things is they still trade in fractions. And I don't know about you, but in grade school and high school, I just hated fractions, okay? Hated fractions. So they trade in 32 seconds. So it's going to go 1 30-second to 2 30-seconds to 3 30-seconds. That would be 3 ticks, okay? Kentucky does have 2 time zones, but I'm on the East Coast. So here's what you need to be cautionary on. Interest rates, anytime there's a major Fed announcement or any major economic news, you got to be careful. I use a con a day to keep me on track so that I know when there's going to be trouble spots. All right, tick values. The bond for every 1 tick is $31.25. Okay, we've already covered the months. This is what it looks like on a set of quote machines. So the 30-year would be USHM13, USM13, USU13, USZ13, or it'll be ZB, M, U, or Z. This will be infinity. If you just call your broker, what you can do is they'll tell you what the symbol is that you need. Now, for toss, if you just go /ZB, that'll do you. You'll be good to go. Now, I think the next slide is the one of, all right, so this is one of the, so there's about 5 really important slides that you got to pay attention to, and this is one of them. If you don't understand futures, or if you don't understand how the bonds work, pay attention to this one. What we're going to do is we're going to pretend that you are long right here, if I can make this pointer work, at 135. Do you see this where I'm pointing at on the tracker here? So from 135, does everybody see my pointer? If you go from 135 to 135 and 130 seconds, how much money would you make if you were long? From here to here. If you just go up one tick, tick, from there to there, tick, tick. All right, so you're going to make $31.25. Now, if you're long from 31.25 and you hold it all the way up until bonds are up 1 full point on the day, how many ticks is that, and how much money will you make? Plus commission. The commission is like $4. Commission for one contract is $4. Yeah, 32 ticks is $1,000. Now, you may ask yourself, why are we risking 156 to make 1,000? Does anybody remember what the average true range of bonds were? Was it more than 32 ticks? It was slightly over that. So what we're trying to do is we're trying to get the most, we're trying to take advantage. It was a little bit over a point, right? It was 1.25 points. So what we're trying to do is we're just trying to go for a point. So what we're doing is we're going to risk 5 ticks to get paid on 32. So it was 1.15. Does the trade make sense in your head when you're sitting there going, okay, I think I can do this? So anybody lost here on fractions or anything, you shouldn't be. This is how they look on brokerage screens. On this side, you can see they're quoting them on 130 seconds. So it's 131, 131, 30 seconds, 132, 132, and 130 second, 132, and 230 seconds. On some other electronic packages, they will quote them in decimals like 133.12, 133.13. That just means 1 tick. Is that the margin? No, that's not the margin. That's what we're risking. We're risking 156. So let's cover the margin though. First, call your broker. You can get them as low as $300 intraday margin. A lot of people will quote you $500 intraday margin, but you got to call your broker for intraday margin on these to see what your broker recommends. I don't recommend that you go less than 500 day intraday margin, but a lot of people will let you do it. The 30-year for an overnight hold is going to cost you $3,375. All right. The 10-year is going to cost $1,490. The 5-year is going to cost you $743, and the 2-year is $304. Now, that's not what it costs. That's just what you have to have in your account to hold it overnight. Okay. So like they're not going to take that out of your account. It's kind of like a down deposit. It's like a deposit where if you make or lose money, you get that $3,300 back or that $743 back too. All right. So tell them what a car is. A car is a contract. It's just the old adage of one contract means a car. Okay, one car equals one contract. That's correct. It's just old verbiage from back in the day. All right, now let's talk about this really quick because you got to wrap your head around this. If you, so I'm not going to draw because the pen sucks on this thing. If you were long bonds at 9:30 in the morning and you exited them at 4:30, is that intraday margin or overnight margin? That's right, it's intraday. If you go, I see the pen stinks, doesn't it? Who's drawing? That's hilarious. Yeah, whoever's doing it, you draw just like me, just like a third grader. All right. So, all right. So now for the next one, that's Jeanette. That's funny. If you go, let's say you're long the bond market at 9:30 in the morning and you hold till 5:15, is that an overnight trade or an intraday trade? That's right. That's overnight. Okay. Now let's think about this a different way. All right. Let's say you go long right now at 8:41 p.m. and you hold all the way until tomorrow at 450. Is that an overnight trade or an intraday trade? That's intraday margin, baby. Intraday margin. Do you see why you may want to do this trade now? You can stay in this trade for almost 23 hours. And in that 23 hours, the bond market has a really good chance or shot at moving a full point for you. Okay? And the beauty about this is you're not going to have to mess with it much. All right? So hopefully that helps you out. All right, let's go to the next slide here. The 30-year reversal trade. All right? So I talked about earlier how the bond market will move, it'll thrust, and then what it'll do is the bond market, let's say it's going down, it'll go down, 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 and then what it'll do is it'll retrace up 8 ticks, and then it'll stop, and then it'll continue on its merry way. So what you want to do is on that 8-tick reversal, you want to short it, place a stop at 5 ticks, and a target at 32 ticks. Now, it doesn't, there's 3 different moods or modes it gets in. It'll retrace 8 ticks, 12 ticks, or 16 ticks. Now, you can't afford trade-wise to do all 3 of them. So what I do is I pick either the 8 or the 16. And if you're going to do this trade first time, do the 8. It works more often than the others do. But there's 3 different modes of operation it'll get. It'll either break down, retrace 8 ticks, and then continue on its way. That's the first trade. Now, I've got a better slide, but I just want to make sure that you understand it. You're not going to need any of these notes because I'm going to explain it on the slide. All right, so first what you're going to look for is the overall daily trend. Right now, how do you have the 30-year bond going? And you may not know, but here's a good analogy to you. This is going to be a trade of the decade, and I've been shorting bonds for a while now. Who in here believes that interest rates are going to stay this low on your mortgage if you have a mortgage? Does anybody believe that interest rates are going to stay down here for the next year, 2 years, 3 years? Yeah, right. It's probably not going to happen, right? So all you have to remember is if the interest rate in your house is going to rise, the 30-year bond market's going to do this. It's going to go down. Okay? It's just a fundamental thing. It works a lot. So that's all you really have to remember. All right? And it doesn't always work like that, but that's a good analogy. All right? So let's go through. The first thing what you want to do is you want to look for the daily trend of the market. Now let's go through this one more time. If we have 6 losing trades and we only have 4 winning trades, then this thing's only going to net us $32.50. All right, let's say it's worse. Let's say, hey, we have 7 losers and we only have 3 winners. Then we're going to net, that's actually wrong. It should be $19.08. Okay, here's what this trade looks like. What's this trade right here called that I did? What is that right there when I did that trade? I know everybody's seen this before if you've traded more than 2 minutes. That's called a loss. Okay? That's a stop out. That's right. That means I donated the market $156. But what I do is I go, that's okay, market. I'll get it back with some interests on it next time. Now, what's this right here called? That also is called a stop loss. So I'm going to donate another 156. Okay, market, I got you. You got me. So I've donated you 156 and then 156. Okay. Now I've got the day session in the overnight, the day session of the 30-year bond pegged is going lower. So what I do is I let the market open up at 6 o'clock right here. Then I let the market sell off. I let it make this low right here. I let it make a low, and then I let it bounce up 8 ticks, and then I short it. It's a good old bounce and pounce. And then what's this right here called? It's called me getting paid and at a very high interest rate on the market for being disciplined. So it's 156, and then 1,000. So what's my net over those 3 trades? Somebody do the math for me real quick. About 700, 750, 688. Not bad, right? No matter how you add it up, it's good. Okay. So let's go through the trade one more time. So this is this trade that I actually did in my own account. So the first thing is, where would you have the bond market pegged here? I've got them in a solid uptrend, but the uptrend line has been violated. So now we're in a downtrend. Does everyone agree? Say yes if you agree. How do you figure out the 8-tick reversal? I'll show you. All right, so you would agree. So what's our job then? If we have a good sense that the suckers are trending lower, what are we going to do? Are we going to short them on bounces, or are we going to buy them on pullbacks? You're only going to buy them on pullbacks if you hate money. Who in here hates money? Right? All right, so we're going to short them on a bounce. We're going to do a bounce and bounce. Here's what we're going to do. The bond market is in a downtrend on the daily. I'm going to let it open up on the Globex right here. I'm going to let it open up at Globex, and then it breaks lower. Do you see how it breaks lower here for me? I'm going to just put a line right there and go, okay, that's the low right there. And then I'm just going to count back from that most intermediate low. I'm counting back 8 ticks is all I'm doing. That's the low. I count back 8 ticks. That's the low. I count back 8 ticks. Now, if it retraces 6 ticks and then makes a new low, then I would count this as the low. Now, if it retraces 4 ticks and then makes another new low, I would wait for this new low. Really simple, right? I'll do this trade anywhere from 7 o'clock to 11:30 at night. Okay, 7 o'clock p.m. East Coast time to 11:30 at night. And I usually do it at 6, but a lot of times I'm taking Mason to jiu-jitsu, or I'm taking McKenzie to gymnastics, or I'm taking Morgan to dance class, so it just all depends. What if it's 10 ticks? Well, if it retraces 10 ticks, I'm already in it, and I'm down 2 ticks. If it retraces 8 ticks, I'm already short on the 8 ticks, and now it's going against me 2 ticks. Stops, 5 ticks. Stop is 5 ticks. Here's the actual trade that I did. You can see there's the sell-off. There's the low. Now look, here's 146 and 4/30 seconds. 4 plus 8 is what? This is the hard math. 4 ticks plus 8 ticks is what? There we go, 12. So it's 146 and 12/30 seconds. So right there's where I shorted it at. Now, I put the trade on. This is my stop loss. So 12 ticks plus 5 ticks is what? 12 ticks plus 5 ticks is what? 17. That's 5 tick stop. And then I've got a 32 tick target down here. I place the trade. This is the key. I go to bed. I do not look it directly in the eye. I go to bed and I sleep like a baby. Like a baby. I don't get up at 3 and check it and go, oh my God, I'm up $400 on it. I should take it. I'm up $600. Maybe I should take it. No. Keep your butt in bed. Because why? Why do you think this trade probably works? Why do you think it works? Because there's a couple reasons. Number one, we're risking a very small amount of money. And number two, we're going for a real big crazy target. Okay? And then plus, the biggest factor of why you are losing money is out of the trade. You're not going to be able to jump out of it early because your big old butt's going to be in the bed. Right? So all we're doing is we're outwitting ourselves because we never get smarter once we're in a trade. All right, so this is what the trade setup looked like in my real account. You can see I started trailing the stop down when I woke up that morning. I just trailed it a little bit. And then this right here is the target, and then boom, I was out of it, and I got the full target. Now, I will tell you, and this trade's got 2 thumbs up, seal of approval from this cute little kid here. The 30-year bond is on the Chicago border trade. Yes, Chicago border trade. Now, let's talk about another trade if I've got time. I will tell you I've been experimenting with risking 8 to 10 ticks. I've been risking 300 to make 2,000, and I've done it about 5 times right now, and it's working out really, really good. Where I'm risking 300 to make 2,000, and it's doing really, really good. Okay. So let's talk about the any questions on this trade setup. So I got 27 more minutes. Any questions on that first trade setup? I'm going to do this trade live in front of you here in a minute. I've actually already got a bid on it, and I haven't got filled on it yet. How did you do it 3 times if you weren't looking at it? No. The first time was intraday, Diane, and then the second time is overnight, or the third time was overnight. You can do it intraday too. Always take profit after a full 32 ticks. Most of the time I do, yes. Won't the market maker try to take you out of your stop? No, don't worry about market makers. Market makers aren't going to come after your 4 lot. They got better stuff to do. And there's no market makers in futures anyway. There's market makers in stock market, but not futures market. How do you define the trend? I use Ichimoku. Was anybody here for Andrew King's talk on when he was here? Anybody? I'm a huge fan of Ichimoku too, and I've actually got one of one of the best-selling courses on Ichimoku. Cloud charts, Ichimoku. There's only a handful of books, like 3 or 4 books. It's been the number 1 bestseller in the Japanese trading market for the past 7 years. It's called Ichimoku, or cloud charts. It sounds like you're sneezing. You go Ichimoku. What reports would you get up at night? I wouldn't get up at night for anything. I'll be in bed. I've got a stop loss. I don't really care. Now, if you will let me get through the next trade setup, if you guys want, as a bonus, I will teach you some basics about Ichimoku. It's a very good Japanese charting methodology, and it's real tight. It's solid. It's a good strategy. All right. So, any questions on the first trade setup? I got 26 more minutes, and the next trade setup is very easy to just explain. That trade that I'm talking about right there, that's the overnight bond trade. It'll also work on an intraday trade. But the reason you do it overnight is why? Because it's going to give you more time to stay in that trade. What is the entry you are looking for on the ZB right now? All right, so I'll talk about that in a minute. It's not anywhere close, so we're fine. I can't see nothing. Don't worry, there ain't nothing to see. All right, entry point again, 8-tick reversal. And you're going to look for a low. I'll do the trade live in front of you here in just a second. Let's go through a sneak attack trade. So a sneak attack trade is going to be this. Write down these rules. First thing, are the bonds in an up or down trend, up or down here? So they're in an uptrend, but once it broke this right here, now it's a new downtrend, right? Are we all on the same page? If you agree that on this slide that the bond market is now trending lower, just give me a yes. All right, so we all agree. That's good. Now, here's how this works. Now, these slides are a little fuzzy because when you import them into Omnovia, they do a little compression. So I'll do my best to draw on these if I can. What you're going to do is you're going to track the high and the low from 720 to 820. So you don't have to get up at 720. You just have to be up by 8:15 so you can track this by 820. What you're going to do is you're going to bracket. You're going to see where the low is from 720 and the high is from 820. So, and it doesn't really matter if the high or the low happens first. You're just going to basically bracket from 7:20 a.m. to 8:20 a.m. East Coast time. You're going to figure out where the high and the low of that 1 hour time frame is. Okay, AM. This is in the morning. AM. Now, in this example, you have got 145, 21, 30 seconds is the low. Okay, you can see there. And then you've got the high at 145 and 31, 30 seconds. Do you see that? Minutes. It's from 7:20 to 8:20. That would be time. Wouldn't be ticks. All right. Does everybody understand where I'm getting it from? It's from 7:20 to 8:20. We're going to bracket that. So what we're going to do is we're going to take the ticks and we're going to say, all right, from 7:20 to 8:20, it went from 145, 21, 30 seconds to 145 and 31, 30 seconds. How many ticks is that? So yeah, it's 1 hour prior to open. It's exactly what it is. 1 hour prior to open. So that's 10 ticks. So you're going to go 145. Look here at my pointer. You're going to go 145, 31, 30 seconds minus 145, 21, 30 seconds. That's 10 ticks. Here's the rule you need to know. If this range is 17 ticks or greater, you can't do the trade. If it's 17 ticks or less, you can do the trade. What time does the market open? Well, the pit opens up at 8:20 and closes at 3 o'clock, but the electronic market opens up at 6 and closes at 5. So it's already open electronic, but pit session it's closed. All right. Now, here's what you're going to do. Once you've got that range, so can we do this trade? Does it meet our criteria? Is it 17 ticks or less? Answer is yes, we can do it. If it's 17 ticks or bigger on that range, we're going to leave it alone because it's already moved too much, and we're not going to make any money because it's already happened. Now all we're going to do is once it breaks out of that range, if it goes higher than 145, 31, 30 seconds, what are we going to do right here? If it goes to 145 and 32, 30 seconds, which will be 146, right here, what are we going to do when it breaks out of that range? What are we going to do? A trick question. You're not going to do anything because it's in a downtrend. Okay. Now, if you have a breakout to the downside, like this is your downside right here, if it breaks out the low here, now what are you going to do? You're going to short it. So what we're going to do is, remember when we looked in the slide before and we said the bonds were in a downtrend? Then we're not going to buy them. We're going to short them on that breakout of that first hour range. And then what you're going to do is, whatever the height of that tick was, what was the range of that first hour? How many ticks was it? How many ticks? 10 ticks. That's going to be your target, and your stop is always 5 ticks. So you're going to risk 5 to make 10. Short 1 tick below the range. Yes, 1 tick below. You can massage it there, Clay. You can do 1 or 2 ticks. But that's it. That's the trade setup. So I'm going to go over it one more time. I got 21 more minutes. So here we go. Here is the low at 720. Here is the high at 720. We get a breakout here, and we go, oh, man, we should go long. Nah, it's in a downtrend. We're only going to take shorts. At this example right here, we're going to get short at 145, 20, 30 seconds. We place a stop loss at 145 and 25, 30 seconds because that's 5 ticks. And then our target is going to be 10 ticks. So we're going to go 145 and 11, 30 seconds because the height of the first hour range was 10 ticks. Can you trade extended into overnight or possible? Can the trade extend into the overnight or possible the next trade? Yes, it can if you want it to, but I highly recommend that you at least take half off when you hit that first target. Okay? Now, for me, I hate calculating it up. I am not the sharpest knife in the drawer or the sharpest axe in the shed. So what I do is I call programmers and I say, hey, here's what I need to happen. When XYZ happens, I need lines to be on the chart so that I don't have to think about this. So what I've got set up here is you can see this is my short signal. Okay, that's my short signal right there, that little purple dot. That is my short stop right there, that red line, and then there's my first target. And I just know I can look at it and go, okay, I got a short here, stop here, target there. So I just make my life a lot easier. 5 ticks, yes. And this is an example of a long. Here you would see there's my long signal. Here's my stop loss, which did not get triggered. And then here's my first target. So I like making my life a lot easier. So 3 key things that you've got to have. 3 key things. And I'm going to go to live charts here in just a minute if I can get desktop sharing to work, okay? Number 1, you got to have good money management. If you don't have good money management, you are going to get screwed so hard in the markets. It's going to be unbelievably how much pain you're going to go through if you don't have good money management. You got to have some good entries, but more importantly, you got to have excellent exits, okay? Hold those suckers a little bit longer. Now, a lot of people will tell you, like, man, if I had more confidence, I could make more profits. Sorry, but it doesn't work that way. Usually, you make more profits, and then you get more confidence, and then your confidence grows, and then you get better at money management, you get better entries, you get better exits, and then your profits grow, and then your confidence grows. So make sure that you are on top of that. All right, now you got to have good setups. Good setups executed will beat the pants off of a poorly or perfectly executed trading plan any day. Good is good enough in a lot of markets. You don't have to be perfect. Quit manipulating these things so bad because you're afraid of losing money. If you're afraid of losing money, get out of the markets. You're going to lose money. It's going to happen. You might as well lean into it. Do not try to filter out all the losers or the stop outs. That is a fool's game and for suckers only. Enjoy the process. You're going to have some wins. You're going to have some losses. Okay? Now, I'm going to make you a special offer on a class. These were 2 of my favorite bond trades that I did in front of you, and I'm going to do this trade in front of you while we're here, and we'll see if I get filled or not overnight. And then I'm also going to teach you a little bit about Ichimoku Live because I've got 17 more minutes left. All right. So here's the special offer. If you go to hubertcenters.com, and I don't have a link. I don't think I do. Maybe I do. If you go to hubertcenters.com, you can see this offer. And what I'm going to do is I'm going to give you 2 courses for the price of 1 as soon as I figure out how to advance the slide. So I've got a course called My Favorite Trade Setups right now, and it sells for $197. I also have the #1 selling Ichimoku chart class. So it's an Ichimoku charting class for $197. The value is $394. You can have it for tonight with a special offer of $97. This is for the first 100 people that are in the TradePub trading room tonight. You can also call the office, area code 859-963-3445. Area code 859-963-3445. You can go to hubertcenters.com/win. hubertcenters.com/win. So let me show you what you're going to get with the courses, okay? So in the courses, they come with, number one, a 100% satisfaction guarantee. If you don't like the course for any reason, I'll give you your money back, and it'd be no big deal, okay? It's 100% satisfaction, no questions asked. If you don't love it, then I don't want your money. I always over-deliver, so I know you're going to get at least 10 times your value, all right? So this is what's in the course. You will learn in Module 1, my favorite stock swing trades and day trades. Module 2, my favorite swing trades and day trades in stocks. There's 2 different modules there. In Module 3, my favorite E-mini day trades. In Module 4, gold trading swing trades and day trades. And then the bond trading swing and day trades. And then also I'm going to give you my best-selling course bonus, Ichimoku cloud charts. Okay? So here's what's in each individual module. Many slides are just a booger to advance. All right, Module 1. Favorite ways to scan the markets for swing trades. Best way to scan the markets for day trades. How to filter out the best trades to take. That's in Module 1. It's actually about 7 hours. The whole course is about 7 hours of online video. Module 2 is going to be stock swing trades and day trades. I'm going to show you the 7 horseman trades. I'm going to show you the 7 stocks that beat earnings 90% of the time. There's 7 stocks that beat earnings 90% of the time. Just imagine how powerful you will be with that information. And then I'm going to teach you 7 stocks that beat earnings 80% of the time. Okay, you'll get that in the course. And then on top of that, you're going to get to learn how to trade stock play gaps. All right, stock trade gaps. And we're going to go over the gap and go and the gap and crap. And then that's Module 2. Module 3. I don't know why I got hit so many times. Module 3, E-mini day trades. How to trade gaps on the index futures. We're going to talk about the ambush trade, the 85-115 trade, the crescendo trade setup that just happened last night. You should have been long last night for the gap up. And if you're not, you need to learn how to do the crescendo trade. Okay? That's Module 3. Now in Module 4, Module 4, it should be 4, it says 3. The famous Goodnight Gold trade, the Gold Rush trade, and the Gold Bug trade. All right? That's Module 4. Module 5, the bond trade. I've already showed you how to do the overnight bond trade here, and I also showed you how to do the sneak attack trade. So you already have 2 of my favorite tactics for free today. I also go over the red tails. Now, and then you will also learn the Ichimoku cloud charting secrets. And I'm going to go how to use them in action and how to use them and everything. So that's it. Here is the link to everything. hubertcenters.com/win. I'm going to answer questions here for a little bit. I'll try to answer as many questions as I can. The phone's ringing in the background. You probably hear it. It's aggravating the heck out of me. I know that. If you don't get a live operator, we've got 3 people here taking your orders. Just leave a voicemail and we'll call you back. Does it include the Ichimoku indicator? The Ichimoku indicator is actually on most platforms. I'm not going to sell you the Ichimoku because most decent platforms have it. TOS and TradeStation both have it. Sierra Charts have it. Yep, TradeStation's got it. Yep, it's easy. The course goes through and shows you how to do it. We actually go in detail and go, here's where it's at in TOS. Here's where it's at in TOS. Here's where it's in TradeStation. Harry, you'd have to check in the members area, but you can always email support. You know that, Harry. I'm sure that Susanna or Kelly or Jerry will take care of you. How about NinjaTrader? I don't know about NinjaTrader. I would assume that it would, but I don't know that NinjaTrader has Ichimoku. But you don't have to have Ichimoku in order to learn all the favorite trade setups that I have, okay? On the favorite trade setups, there's a little bit different. Lord have mercy. Oh, so somebody says Ninja does have Ichimoku. TradeStation has it where? I'll show you where I can show you where Ichimoku is on TradeStation. It's pretty easy. Very limited version of Ninja. Okay, so go to hubertcenters.com/. When. So what questions do you have about the two trade setups? You guys have any questions on the two bond trade setups that I shared with you tonight? Because we're going to do it here in a second. Okay. When do you recommend trading gold? I trade gold at 11:30 at night and also at 6 p.m. On the sneak attack, always use 5-tick stop loss. Yes. How long do we have to learn it? Oh, the course will be up until either you die or I die, which we're both going to eventually die, but that's how long it'll be up. How did you decide the number of ticks? For the amount of risk, I decide the amount of the 8, 12 or tick. How do I decide? I'll show you here in just a minute. I've got 11 minutes, so keep asking questions. And on the last 8 minutes or so, the last 5 or 8 minutes, I'll go through and we'll do the bond trade live in front of you, and then I'll also teach you something about Ichimoku. Gold open at 6 a.m. Gold opens up at 6 p.m. There are add-ons around the web for Ninja for cloud charts. Oh, good to know. Are the courses downloaded? Do you need to ship anything? Nope, it's downloaded. As soon as you order it, we'll send you a link with a password, and then you can log in and start taking the course. It's about 7 hours. It's originally 2 different courses, and I just taught it just last month, so it's really, really current. Or is that TMI? What is TMI, Doug? Where you at? What does gold spike at? Why does gold spike at 21 ETN? It's because you've got a lot of different markets opening up. I mean, you've got, at that point, you've had Sydney, Tokyo, Hong Kong, Moscow, and you're about to have the London open around that time. Can we download the course? Can we download the courses to our computer? I think it's just streaming video, Marty. I think it's just streaming video, as far as I know. I'm gonna give you guys a link here so you can have it. I don't think it's downloadable, but I'm not positive. I'm not that techie driven. Alrighty, there's the link. Is this being recorded? This is being recorded. They're recording every single session. All right, so I've got 9 minutes. So let's do this. I'm going to go over to the desk sharing app, and I'm going to try to launch it. And we're going to see if it'll see my computer screen. Can you see my screen? Can you see my screen? I don't know what you can or cannot see, so just let me know when you can see it. Yes, no, maybe? Okay, oh, hold on. Monitor, hold on. I'm on the wrong monitor. I need monitor, hold on. Let me kill this. Monitor, what monitor is it? That one? Hold on here. Let me kill that. That's 6. I don't just know what monitor. I'm going to move this to monitor 6 and just move the thing. Now let's do this. Now can you see my trade station? Now that I know what machine I'm on. There we go. Amazing when technology works. All right, so are we still in the same? So here's how you use Ichimoku, okay? So Ichimoku on, God, the phone's driving me crazy. On Ichimoku, we're gonna go at US. Okay, we're gonna go at US. Would you guys call that an up or a downtrend? Now I've got just a few more minutes, 8 minutes, so this should give us enough time. So I would call this a downtrend. So watch how this happens. And I'm going to do Ichimoku and the bond all in one swell swoop. All right. Do you see where the candlesticks went below this blue cloud? Do you see this? This is called a cloud. If the price action is below that cloud, that means that instrument is bearish. So when the candlesticks went below the cloud, and you see this little blue line, you see where the blue line went below the cloud, then it's going to trend a very long time to the downside. So bonds are in a downtrend. Now, if you don't believe me, let me show you Apple, AAPL. So on Apple, and we just got a lot of our members in Apple at 448 the other day. Do you see where the cloud, where the Apple went below the cloud here? You see where it broke below the cloud? Do you see that? Yes or no? I don't know what you can see. All right. Now, do you see where this blue line went on the other side of the cloud here? Right here? What did Apple do after that happened? Did it go up or down for a while? Yeah, it dropped like a stone, right? So we're going to short rallies. Now, check this out. Now, what did Apple just do not long ago? Apple went on the other side of the cloud, right? And then it also, the lagging line went above the cloud. And at that point, what we did is we got a lot of the members long from 448, and we just sold half of our position on Apple at 502, okay? So we got long at 448, and we stayed long and sold half at 502. So that's Ichimoku. Now, all the lines, there's different sub-signals in this thing. And like I said, I'm giving you the bonus to Ichimoku Cloud Charting Secrets, okay? Cloud Charting Secrets is a part of this course that you're getting for $97. How do we get Ichimoku for TradeStation? You go right-click, you go Insert Analysis Technique, and then you just look in your analysis technique over here, and it's right here. It says Ichimoku Cloud. Now, you got to make sure that you format your charts so that you've got 25 spaces to the right, or it won't show up. But it's under your indicator tab, okay? And what you're going to do is you're going to go right-click, you're going to go Format Window, and then under the General tab, you're going to go Spaces to the right, 30 bars, and that'll allow you to see the indicator in enough view. Let's go over here to bonds. So we've decided bonds are going lower. Is that correct? Okay. Here is a 1 minute chart of the bonds. Now you can see they're a little thin at night, right? But that's okay. You really don't even need a chart to trade the suckers. This is going to be our low. Does everybody see the low is at 130, 1930 seconds. What's 19 plus 8? What is that? What is 19 plus 8? Somebody tell me. 27? And what we're going to do is we're going to place a sell stop at 27. Is that right? Well, that's way up here. So at 27, I'm going to do a sell stop right there. Okay? Now, another way to do it is easier. I'm just going to go right over here to this, and I'm going to go, okay, the bond market is at 19, and I'm just going to go 1, 2, 3, 4, 5, 6, 7, 8. You see that? You see how I did that? I'm going to cancel this order real quick. Yes. The first thing I want to do is I'm going to make it GTC, and then I'm risking 5 ticks. I'm risking 5 ticks to make 32. Risking 5 to make 32, and I'm going to hit OK. From the low here of the bonds at 1930 seconds, I'm going to go 1, 2, 3, 4, 5, 6, 7, 8. And I'm going to sell that thing. Now you can see my live order. I'm going to short it if it gets up here. There's my stop loss, and there's my target. That's all you do. Sell limit, yeah. It's a sell. It's a stop market is what it is, and then it's a limit down here. So as soon as it's touched, it's going to go market order. Okay. Is everybody good? Everybody kosher? Everybody understand? All right. I'm going to go back to the slides. All right. So I'm back at the slides. So if you go to hubertcenters.com/win, hubertcenters.com/win. You can also call the telephone number, area code 859-963-3445. A lot of people ask me why I sell this course so cheap. Here's why I really do that. If you buy the course and you like the course and you got $400 worth of value, then the next time I come out with a more expensive, higher-end course, you're more likely to buy it. That's why I do it. So if it goes lower before getting in, then you'll repeat until in. Yes. Now, the question is, if I get in, so here's another, all right, so it just went down another tick. Did you see that? Went down another tick. So I'm going to go, there's 18, there's 1, 2, 3, 4, 5, 6, 7, 8. So I just need to go down one tick. I'll keep doing that. Now, I'm not going to sit here and watch it all night long, right? I'll come back, I'll go upstairs, I'll chill with the family, and then I'll watch some TV, and then I'll come back down here at 11:30, see if I got filled. If I didn't, I'll move the order down again, and then I'll go to bed. Hubert, phone is overloaded and we are dumped out. Yeah, if you just leave a voicemail, Jared and Kelly are both here. They're manning the phones. They'll call you back as soon as they can. Hubert, can you tell us about your trading room? What times are you in the room? I'm in the room on average either Wednesday or Thursday from 9:30 to 11:30. From 9:30 to 11. Does Ichimoku work on all time frames? No. Ichimoku, my favorite time frames. The best ones that I back tested and used are a daily, a 60, and a 5 minute. A daily, a 60, and a 5 minute, or a daily 60 and a 10 minute works really good too. Daily 60-10 works real good. those are my preferred time frames. But every market has a little bit different one. So like crude oil will be like 5 minutes, and E-minis will be like 12 or 8. It just all depends. But the good standard ones will be daily, 60-minute and 10-minute. Now the cool thing about the Ichimoku is a 60-minute signal will last for about 4 days. A 60-minute signal will last for about 4 days. Sorry, what is the setup for GC in bonds? What do you mean, what's the setup? Target is 32 ticks, yes. On TradeStation, place an 8-tick trail to short and no watch. You could, Jack. I guess you could do that, yeah. Can you show the trade window again? I can't. I've only got one. I have only got 1 minute, guys. I can show the trade. There you go. There's the trade right there if you're interested. So like I said, go to when will the new improved squeeze be available? It's still in the works. I haven't got it done yet. I'm still working on it, but thanks for the interest. Will this work on the lumber market? Ichimoku? Ichimoku will work on every market, but I don't have any trades geared towards the lumber market, no, Joe. Is this being recorded and will it be mailed out? Yes, it will. Do you teach larger point goals in advanced courses? I just teach all of my favorite trade setups is what I do in that. How long is your guarantee good for us to know if we like it or not? It's a 30-day, 100%, no questions asked guarantee. Which version of TradeStation do you use? I'm on 9.1 build 22, I believe. Yeah, 9.1 build 22. I don't see the indicator in my TradeStation 9.1 update. It's under indicator and it's called Ichimoku. All right, I got to go back to the slides really quick because I'm getting ready to get kicked out of here. HubertCenters.com/win. Here is the link. You can also call the office. I appreciate you guys showing up. Enjoy the rest of the evening with all of the good traders that are going to teach you stuff, and hopefully we will get filled on the bond trade, and we'll wake up in a good mood in the morning. All right. Good luck. Hope it helps. I'll see you on the videos.
All right, everybody, and thank you, Hubert. Everybody, give Hubert a big old round of applause. It's been a New York minute. Feels like, right? Just flying by. Clap, clap. Yeah. All right, so that's Hubert's link. It's hubertcenters.com/win. This is Jeanette Sims, and I'm standing in tonight for Morgan Busby, owner of TradingPub's, so he could take a little bit of a break and spend some time with his family. And in this, what we're calling a Trade-A-Thon, y'all having a good time tonight? Ton of people in here. I can't believe we're holding this many people this late. Y'all are in it, aren't y'all? Morgan hasn't abandoned no one. Trust me, he's over there working his tail off in the background. If you could only see. All in. I love it. I love it. All right. Well, I'm Jeanette, and I've been around this business for a while, since '01, and my favorite market is futures. I mean, that's where I was raised. I was raised in the S&P and in the Dow, and so it's always exciting to me to sit through webinars like this and listen to Hubert, for example, speak about the bond market, because I'm not a bond trader. I've never traded bonds, and so they seem like a big mystery to me. And you guys, I keep seeing this question pop up, and